From the subdivisions of journal, cash book is holding an important role in our business world. There are different types of cash book. Usually all business people are using 3-column cash book. That means discount, cash and bank accounts are operated in a single book. This discount, cash and bank. These 3 accounts, debit side and the credit side, are in same book. So it is very easy to post the cash and the banking transactions in this book. So a lot of persons say generally this 3-column cash book is applied everywhere. It is very useful. And from this cash book we can say a discount, cash and bank, 3 accounts are incorporated. The debit side of the discount is discount allowed and the credit side is discount received. Debit side of the cash is receipts and credit side is payments. Debit side of the bank is deposits and the credit side is withdrawals. Okay. Then the debit side of the bank is deposits, credit side is withdrawals. When you are opening an account with a bank is also maintaining our account. The copy of that account is known as passbook or pass sheet. This is applied to a customer. So it's the duty of the customer to verify the passbook and the bank account of the 3-column cash book. Usually it must tally, but it never tallies. If heavy transactions are there, usually our cash book, the cash book means bank account of the cash book, and passbook will show a different balance. So on 31st March every year, a customer has to prepare a bank reconciliation statement showing the reasons why this cash book and passbook showing a different balances. If a businessman is having heavy transactions, these transactions may not completely reflected in the passbook. Example, you are depositing some checks. When you deposit checks, you are entering immediately in your 3-column cash book. That means your cash book balance increases. At the same time, passbook balance is not increasing. It will increase as and when this amount is credited. Till then, the cash book and passbook balance will be different. Similarly, you are issuing checks to your creditors. When you issue check creditors need not go to bank immediately. They will send a check to their bank, and that bank will send for collection to our bank. So it will take some time, 3 days or 5 days. So in this period, your cash book balance and passbook balance will be different, because when you are issuing a check, your bank balance increases. At the same time, passbook balance is not decreasing because it is not presented for payment. Similarly, bank is debiting our account for bank charges, incident charges, interest. When bank is debiting, our passbook balance decreases. So simultaneously, if any credit, that is interest or some other fixed interest payment, this will be increasing our passbook balance. So by verifying this cash book and passbook, you have to prepare a bank reconciliation statement. For this, I will give you a simple formula, that is, when checks are deposited, cash book balance increases, passbook balance decreases. When checks are issued, cash book balance decreases, passbook balance increases. A debit in the passbook means passbook balance decrease. A credit in the passbook means passbook balance increased. With this formula, you can prepare a bank reconciliation statement, or you can find out the position of cash book and passbook. But in the case of overdraft means usually our bank account shows a debit balance. That means deposit side will be more. How can you find out an account shows debit balance? If the debit side total is heavier, that account shows debit balance. If the credit side is heavier, that account shows credit balance. That is why I told you in a formula AEDLIC. All assets and expenses account will show only debit balance, and all liabilities and income account will show only credit balance. So when bank account shows a debit balance means it is our balance. When bank account shows a credit balance, it is an overdraft balance. So bank account can either a debit balance or a credit balance. Credit balance means it is overdraft. When bank account shows a credit balance, our passbook will show a debit balance. That is, you must understand that the passbook shows a debit balance. So when you are issuing checks, your OD increases in cash book. When you are depositing checks, your OD decreases in the cash book. A debit in the passbook means your OD is increasing in the passbook, and a credit in the passbook means your OD is decreasing in the passbook. With this formula also, you can do the problems of overdraft of bank reconciliation statement.